Hey traders, welcome back to another stock market video prepping for the week ahead. Today we'll be taking a look at some of the major stock market ETFs as well as individual stocks that I am watching going into the week ahead, some sectors that look more attractive than others, and this week is a big one. We'll take a look at some price action, first and foremost on the US stock market as a whole through the ETFs QQQ and SPY. Let's jump into it. So first and foremost, I want to just address some of the things that are going on this week. We have the CPI number, which we know will be coming out Friday. This definitely is going to be a key pivotal part of the week, as well as a very important earnings report coming out from TSLA, Tesla Motors. We've got that coming out. I believe that's on Wednesday. Let's double check and pull that up. Yep, we can see it is actually Wednesday, the 22nd of October. After the bell, we will be hearing from Tesla, of course, a key player in the markets and usually a beacon or an example of how risky the market is feeling at the time. Now, if you've watched my channel for a while, then you know I am a shareholder of Tesla, so I'll give you my take on that going into this week's pivotal earnings report. But first and foremost, let's take a look at the Qs or the NASDAQ ETF here, which I actually believe, and this is why I'm long, that the thing is still in a strong overall upward trend. Now, it's been a weird year in the sense that you had a very violent, all of a sudden high volatile period that has mostly turned into a low volatility year, that is until this past week. And in the last few weeks, if you watch my channel, you've mentioned that I've been really pausing on waiting for opportunities to buy stocks. And I finally got what I believe to be the first dip that was worth buying in quite some time. This day, we saw a huge amount of fear take place in the markets, and a lot of deleveraging events took place. A lot of the crypto world kind of got blown up, and we pulled back right down to what was a very constructive level of support here around the 38.2% retracement from the September lows all the way up to the recent all-time high. You can see that our 38.2% retracement got tagged, and this is where I decided to initiate a long position, bought 700 shares of QQQ with a stop loss below the lows. Now, my thought process with the Qs and the NASDAQ in general is that you've still got a very dominant upward trend and several themes that I still think are intact at this time. I've mapped out a couple of the factors that I'm looking at in this market and why I still think there is still bullishness ahead. Let's go through them. So first and foremost, the Fed is still planning to cut interest rates. We know that they are projecting to cut interest rates 2 more times this year. This is a tailwind for stocks, especially given the idea that I think the overall US economy is still relatively strong, especially when compared to expectations. I can define that a little bit more by going into some data points to show you guys. But I also think that as long as the economy is still holding up strong and rate cuts are still there, AI can continue to fuel gains for some of the mega tech companies that are sort of the beneficiaries of all of this spending that's going on in the world. The final thing is Trump, which is a big I don't know. And I think anybody who says they do know exactly how things are going to play out between Trump and China is full of it, because nobody knows for certain. But history would suggest that when Trump throws kind of a wrench in plans and scares everybody, he tends to walk it back. The classic taco trade is what some call it, but the idea is basically when there's big, scary Trump news, historically, it's been a very good opportunity to buy the dip. And so that is exactly what I did last Friday. I bought the Qs as a whole, kind of with a trade idea to the upside. So I'm looking for this week to see if we can actually trade outside of this consolidation, maybe make a move towards all-time highs. I think that if you're waiting for a technical signal to become more clear here with the NASDAQ, there's 2 scenarios that I see that the bears and bulls would be looking for. For the bulls, I'd be looking to see if we can break 2 fresh all-time highs. I think it's a very clear indication that bulls are still in control and that perhaps we have another leg coming to the upside. If you're a bear in this market, I think you're looking for this area of support that the buyers have been very strong at to fail and to break. If you're looking for lower prices in stocks, if you're looking for an opportunity to short the market, what I'd be looking for at the very least would be a failure to hold this stronghold that bulls have been able to carry on from around the 38.2% retracement. That is, of course, the synopsis for the overall indices. Same thing with the S&P 500, very same idea. Basically, if you're a bear, you're looking for a break of this structure to the downside. Decisive closes below could suggest further downside, and vice versa to the upside. A strong close above could be a signal that buyers are back in control. I've personally chosen to buy the dip, not just because of technicals, but because of the other things that I mentioned. And we can actually get into some of that by just taking a quick look at the macro screener, which still suggests from the stock box's macro screener that our indications for stocks still look pretty good. And without getting in too deep with the specifics here, we have things like strong GDP growth, PMIs came in better than expected, retail sales were strong. So is it a perfect economy out there? No. Is it a winning economy for all levels of incomes? Definitely not. But the overall output of the economy is still strong, and earnings for companies are strong due to the, and this sounds harsh, but it is the wealthy consumer that is kind of propping everything up, still spending, and the economy looks good because the high-end consumer is still doing quite well. Is it fair for all? No. But again, that's not this type of channel. We're not here to debate the ethics of that. We're more here to talk about the stock market. And the stock market, I believe, can continue to push higher based on the metrics that we have here for the time being. And of course, if these things change, we have to adapt with our time, adapt with the times. And that is why this is, we're talking about active trading here. So with that said, though, based on this macro screener, let's get a little bit now into the sectors areas where we can actually take a look at sectors with stronger macro scores according to our system. We can also look at sectors with weaker macro scores, but let's talk first about XLY, IWM, XLI, and XLK. So this is technology, industrials, the Russell, and the consumer discretionary sectors are getting strong overall scores within the stock box's screening system. Now, I do want to go ahead and disclaim this highest scoring one. I did also go long XLY. Let's pull that one up just for reference, as this was, again, another trade that I took in the recent sell-off that we've seen. So the XLY, this is consumer discretionary, at one point had about a 6% drawdown, which I believed to be a good opportunity to pick up a buy the dip opportunity because, again, I think the path of least resistance is to continue to follow trends here. So we pulled back, we tested the 50-period moving average and sort of poked through it and have bounced back and kind of been sitting around it. So I'm looking for some continuation to the upside when it comes to the consumer discretionary ETF, and so I am long on that side. We can also take a look at XLI, which is the industrials, and I think that if you poke back down into support here, there could be an opportunity to look for some long side action. At least that's my opinion for now. I like the upside for industrials as well. And if we take a look at XLK, this is of course your technology sector. I do like the idea of longs. You can see a chart markup that I had already on my screen. Didn't quite get that pullback. And actually we can extend this to the previous high. Didn't quite get that 618% retracement, but was looking for it when we started to dip on last Friday. So we may not be completely out of the woods with all this just yet. You could see something flare up against, China between Trump again, and perhaps that gives us an opportunity to look closer at the XLK ETF. Of course, that's a trade that I am looking personally to take myself. By the way, if you're enjoying my videos here on the stock market side of things, this is a smaller channel here to my main channel where I talk more broadly about indices and commodities and currencies. But on this channel, I keep it focused on stocks. If you like this content, make sure to hit the thumbs up button and subscribe. So again, looking for pullbacks on this one if we get it. If we don't, then I'm just going to stick to the trades that I do have currently open. So that's going to kind of wrap up the strong sectors. Let's also take a look at some of the weak sectors. So XLV is getting a weaker reading here. And I don't necessarily fully agree with the price action. Like I wouldn't be bearish on XLV. In fact, I think healthcare may have actually started to bottom out. But I don't love the macro setup for healthcare as much as I do for other sectors, which is, again, the screening process that I'm talking about here. So healthcare, again, I think, could rally along other things, but XLU is another one that's now getting a little bit of a lackluster macro outlook. With that near all-time highs, I definitely would be at least waiting for pullbacks on this one if I was bullish, the 618% retracement. So I do think there's not a lot of buying I can do up here. I do own a couple utility stocks from a while ago. If I pull up specifically XEL, you can see I am long this one with a stop loss trailed below the 50% retracement. I'm also long NEE. This is NextEra Energy. Put a stop loss below this structure point here around the 50% retracement. So I still like these stocks. Like individually, I think they have some pretty exciting stories, and I do like the idea of being long utilities. But I agree with the idea that chasing them at these levels is probably not the right path. XLF also getting a weak reading. So if I pull up XLF, we also know there's some financial drama going on recently with some of these smaller banks and credit safety stuff like that. But we did see a bit of a sell-off here. If you like financials, it's coming down to this key support level that we marked up on the chart. But again, I still think I like other sectors more than the financials world. If we take a look at consumer staples, consumer staples have been a really a dog for a while. And I think this will not be the case forever. Consumer staples, I think, will have their day in the sun, but they are just less attractive, especially in a bull market. People, will probably rush to these things if you do get a true market fear kind of event. But where we currently trade, where I think risk on can prevail, I also don't have a huge interest in kind of sitting with the consumer staples, which have been mostly not a great spot to be trading or investing. You can see we're pretty much at the same levels that we were in 2022, et cetera, as a sector. So with that said, let's now take a look at some of the individual sectors, some of the stocks that we're finding within them. With that said, let's take a look at XLY. And if I take a look at my top stocks reading here, by the way, if you want to check out the stock box, I'll leave a link in the description down below if you want to explore our tools to do the same process that I am doing here. This is my straight up sequential scanner-esque approach to trading stocks. It is a very semi-automatic process for me. What I mean by that is I am using tools to scan for stuff and then just kind of having it select from thousands of potential stocks out there. It can be a lot of work to find stocks that meet your criteria. So what we're doing here, what you're looking at with the top stocks algorithm, is we're looking at technical readings, we're looking at sentiment readings, and we're looking at financial readings for companies. And a software is doing all that heavy lifting and then generating a report card of stocks for us to look into with higher or lower scores. So if we go back to this idea where we were just talking about, like, for example, technology and consumer cyclical, if we look at consumer cyclical, we can get an idea of some of the stronger or weaker stocks in terms of a scoring. And we're, again, getting a reading based on financials, sentiment, and technicals. And we have Roblox, Carvana, Amazon. These are getting some of the highest readings. I already own shares of Amazon, so let's just pull that one up and take a quick look to see if there was an opportunity to potentially add some further shares. Now, I'm looking at a weekly chart. Let's drop down to a daily chart, and we can actually see that we're in a pretty interesting buy area. In fact, because I already have XLY, I may add, XLY here. I may add a little bit more to my Amazon shares, but probably just cautiously, as I do have quite a bit of exposure to Amazon through that XLY position. Of course, XLY has a bunch of stocks in it, and Amazon is a key player in that ETF. So I do like Amazon to the upside, and I think it's actually a great area here of support. And I would not be surprised if we do see some catch up on Amazon. What I mean by that is not catch up from a bottle, but rather catching up to the rest of the market. Amazon's not actually been an incredible performer relative to a lot of other key players. So I think there's some room. I think Amazon is a remarkable company, full of innovation and actually playing a big role in the AI world. And so I do think Amazon is one that I'd like to pick up, especially when we actually go deeper. We can go take a look now at the individual stock level, which I'm hoping you're kind of seeing. This is the utility of the tool, is you can go from the macro, the high level S&P 500 to individual sectors that look interesting, then to individual stocks. And then within that list of stocks, you can pull up a specific screen of that stock and take a look at some of the key metrics within it. So if we look at specifically Amazon, we've selected that in the top right hand. You can see that Amazon's forward PE and PE ratios are lower than the 3-year average. That makes the stock relatively attractive, in my personal opinion. And you can see that our system is automatically kind of seeing that and ranking it higher for that. Revenue growth, earnings growth, return on equity, price to free cash flow, all of these numbers look relatively good. And so we're getting a good green light here on Amazon. So Amazon, if I didn't own the shares and I didn't have XLY, would likely be a buy for me at this level. In fact, we're also very close to a 38.2% retracement. So perhaps one more punch to the downside, and this is probably an area where I look to add some shares to my existing Amazon position. So I really like the stock, and again, I like the company, I like what they're doing, I like the mission, of course, of Amazon, and the game changing. They're a classic capitalist sort of story that has changed the world for many people in a very positive way. So I like Amazon quite a bit. Looking for pullbacks here. We'll see if we get a little bit more downside there, and that might actually be a stock that I pick up. Now, we also mentioned on our list here, we had Roblox and Carvana. Let's just take a look at Roblox. I've not even pulled this up before on my system. So let's take a look at Roblox. You can see Roblox. So I don't love companies that are not profitable, that are very speculative in nature. So I'd probably pass on Roblox. Though if we just take a look at it for fun, let's take a look at Roblox Corporation. Stock looks incredible in terms of a momentum perspective. Even if I was bullish, it would definitely be waiting for bigger pullbacks here, at least to something like 115, 110 or so. So would probably pass on that despite getting a decent reading. And then the other one was what? Carvana. So Carvana, interesting story, of course, as well. And it's still going to be a pass for me. This is one of those very, very, very high priced stocks. If we just pull up Carvana, again, technicals look fantastic, pulling back to a key area of support, just probably not a stock for me. And it depends your style. Some people like the unprofitable stuff. They like stuff that's very expensive because they're very innovative, right? Whereas I kind of lean more into companies like Amazon, where there is growth and innovation, but the company is not valued astronomically. Now, granted, if you buy stocks that are priced, ridiculously expensive, it does not mean that you can't make money. In fact, I heard this expression once, but buying a block of land in Manhattan 100 years ago was incredibly expensive. And now it's way, way more expensive. You would have done really well buying that very incredibly expensive piece of land. So something to think about. It's all perspective, but it depends your style. And I tend to like to buy profitable companies with sustainable growth, a little old school in that regard, I guess, in today's modern market where you have a lot of hype, you have a lot of excitement out there. Anyways, technology is also another sector that we are looking at for some bullish setups. Nvidia, Uber, Fortinet. I mean, there's a list here, so we can kind of rapid fire. Nvidia is going to be obviously one that if you've watched my channel for a while, I owned Nvidia. I bought it back in April. I did really well with the shares and actually sold out right around this area. So it's moved a little higher from where I sold it. But if we do get a correction, a pullback further, I may look to get back into the stock. And if I actually pull up the weekly chart, this is where I think this gets a lot easier for me. I'd probably be looking at the 38.2 to 50% retracement. And so while that seems like a world away, you can see how quickly, if we do actually get a sell-off in the stock, it can move very quickly. And Nvidia actually is very volatile. People underestimate just how volatile Nvidia shares can be. So I think you could very quickly and very easily get a pullback to the 38.2 to 50% retracement zone for the stock. And if that happens, to me, it would be an opportunity to buy the dip for the longer term. And so I am watching Nvidia closely to see if we do get a sell-off. Uber is a stock that I already own. And if we pull up Uber here, we can take a look. So basically, I am basically looking to sell out of the stock if we fail to hold this area of support here. But I do like the pullback that we are currently seeing. And I think if we actually zoom in here, we could get fancy and kind of draw a really simple trend line, kind of say, hey, we're testing the lower limits of this trend line. Let's see. I think that if you are bullish on the stock, this would be an interesting area to watch it. You have a round number, $90 below here, where I think that price likely will continue to bounce from. So I do like the stock, but we'll probably cut the trade for a very nice win if we do continue to break to the downside. I also mentioned, just really quick, I want to talk about Tesla. So Tesla was my trade of the year. I'll show you what I mean because the P&L on this thing is crazy. I am up $81,712 on my Tesla trade because I bought it during the depths of the April sell-off. Like I said, this is my best trade this year. Was it a very risky trade? Yes and no. Yes, in the sense that Tesla just itself is a very risky stock. Anytime you're holding it, like you're accepting there's a huge volatility premium or potential for this thing to move. Just look at the premiums on the options market. But it was a controlled risk. I thought that when everything was falling out of the sky in April, I bought the stock, and I happened to buy it at a very, very good time. I knew I was gonna, I knew I liked the idea of it going back up, but I had no idea that it was going to go back up pretty much right away from where I bought it. I mean, I bought it in this kind of back and forth, so I sat on it for a little bit and have been rewarded for doing so. So I do like the stock quite a bit. I like the innovation of the company, but it's not something that was for me a forever buy and hold when I took this. It was a trade that has turned into a incredible runner. What I mean by that is that we've seen several instances here where the stock has essentially consolidated, broken higher, consolidated, and I think we could continue to break higher and head to fresh all-time highs in the stock. I bought this as a proxy, as a way to leverage my bullish perspective on the markets at that time without actually paying the premium for leverage. I didn't buy call options or I didn't buy triple X, leveraged ETFs. I instead just bought Tesla because it tends to move more aggressively than the market itself. So it was a cheap way to buy essentially leveraged buys on the market. It was absolutely panicking. You had two things going on at the same time. You had worries around the tariff dynamic and everything going on. And then you had another drop here where Elon Musk and Donald Trump were getting at it. So, the stock has rewarded people who have taken those very scary moment buys. And I think that's, the history of the stock. I've done really, really well with the stock over the years, doing just that, using it as a proxy to trade the market itself with essentially leverage without paying for it. So yes, I am still long Tesla. I am watching this consolidation zone. I'm looking for price to stay above this area of support, but this is not a forever investment for me. If we fail, if we start breaking down this week on earnings, I'm probably just going to take my trade off and just cut the trade. So I'm keeping it really simple here going into this week. I am looking to trail stops on my Tesla idea. If we fail, if we break below, if we have just a rocket to the downside, I should say, a fall out of skies to the downside, I'm just going to cut the trade and, probably looking at under 400, I'll cut off the trade. But it's been an incredible runner for me this year. And I've done quite well with my Tesla buy here this year. So if it goes, it goes. But again, Tesla earnings happening this Wednesday. Let's keep going with more ideas. If we take a look at, let's see, Fortinet is another one. For still rebounding from the big sell-off we saw, but we did see it kind of come back in here towards the end of last week, sitting at support here. I may look to buy back into the stock if given an opportunity, but I also don't love per se, everything about buying a stock that's dropped so much. However, we are seeing some nice momentum building. We are seeing some higher lows here form on the chart here. And holding this area of support. So to me, it's a stock that I like for the long term and may choose to buy a little bit going into this week. So Fortinet, something to watch for me as well. Let's see, what else do we have? ServiceNow. We've been talking about this stock for a little bit. Let's just pull this one up. I don't love the chart, so looking for more momentum than that in terms of picking it up. FI getting negative momentum, so probably going to be a skip for me. I like stocks that are trending up. This one is clearly trending down very sharply here at this time. That's going to wrap it up here for my weekly stock setups that I'm looking for. Let me know what stocks you'd like me to cover in future videos and what you're looking at going into this week. And I should also mention that if you're enjoying this video, make sure to hit the thumbs up button, subscribe, and if you want to check out our software, remember, get a copy of the stock box. All the information can be found to purchase a copy in the description below this video. So thank you very much for watching, guys. Have a great week ahead.